pretty bad outcome for the US dollar in terms of the response in markets, that fall in yields that is supporting the euro in particular, as you mentioned, also sterling, and obviously we're really watching the Bank of England tonight. But for the US dollar, I think the real key there is that it's just been super reliant on that Fed support. So long as the Fed was aggressive on raising rates and was continuing to deliver rate hikes and to talk about further rate hikes, then the US dollar was pretty hard to stop, really, particularly from, say, February through to early March. But obviously things have really turned around. And if we look at the performance over the past couple of weeks of major currencies, and particularly since the Silicon Valley bank collapse, then the US dollar and the Swiss franc are easily the weakest currencies of the majors. So they're not getting that traditional safe haven demand.
Right, but I still want to understand what's the upside for a weakening dollar on the euro as well as the pound?
Well, the euro is obviously getting a bit of support from the ECB. They've led them towards that 50 basis points. They could have gone softer there. Lagarde's been very clear. The commentary this week as well has been supportive from ECB members since the meeting. So they've got that yield support that the US is potentially losing. It really does stand out that we've got at least 50 basis points more priced in for the ECB in coming months. And obviously, they pretty much avoided by far the worst of the potential outcomes over the European winter in terms of energy prices. So that's helped improve the outlook for the Eurozone economy. UK, I think, is a little less compelling. And once we've got that had that terrible inflation number, so they're certainly looking at stagflation as a risk going forward. So it's a bit hard to be too optimistic there.